This morning we had the NFP report and everything reversed course. What was an up market here this morning is now a down market. At least at the time of recording this, the Nasdaq is down 0.8%, the S&P 500 is down 0.5%, Dow Jones down 0.5%, and the Russell getting beat up the hardest. Poor Russell, it's getting used to getting bullied here, down 1% compared to the rest. Let's talk about the NFP report and what it did to the markets. We see stocks lower, gold holding out so impressively, Bitcoin holding up. We got a lot to talk about. Let's jump in. So the first thing I want to do with you guys is go through the NFP numbers. Now, a lot of people in the trading community hear NFP, and I don't even know if they know what NFP stands for. All they know is it's a red folder on Forex Factory and it makes the market move a lot. But there's more to it, and there's some really important stuff that we found out today about the labor market, and it actually sets up a lot of potential trends for the dollar, for gold, for stocks and indices, and much, much more. So let's break it down, and I'll keep it as simple as possible. So first things first, what we're going to look at is the NFP numbers that actually dropped. I've got it pulled up in the Edge Finder, and what we can see here is we have three metrics. We have the actual number that comes out, which is your blue bar, your forecasted values, which is what the market was expecting, and the revision line, and stay tuned on that. Some important stuff there. So let's zoom in over here on the far right-hand side to the latest data that came out this morning. What we can see here is that for the month of January, remember we report previous month's data on the first Friday of the new month, we got some interesting data. You might say at first glance, hey, this is some weak jobs numbers. The expectation, Nick, here, that red dot that you told us about, well, that was higher than what came out. So jobs data must be bad, right? Well, again, that's why we use data, and showcasing it here can make a big difference in making sure that people actually understand what happened with the labor market. It's not what first appears. Okay, so yes, what we had is a less than expected print for jobs. But don't forget about that revisions line that I just talked about. Look at this. Revisions to the previous number went higher. So what this is telling you, what the heck is a revision? Somebody asked me that on the stream today, and I think it's a great question. Why do revisions matter? Well, in the month of December, remember we reported in January, we reported December's numbers, and December's numbers were really good. But not only were they really good, this month when we reported the revisions to the January reported number, and it was actually revised higher. So jobs numbers were really strong in December compared to expectations. So we revised numbers higher. Some really, really strong jobs numbers came in, and we also saw some other important stuff in this report. Let me show you. The unemployment rate, which people were fearful of, myself included, that it was rising, is actually going down. So we see unemployment rate going from 4.1 to 4%. So this is more strong jobs data coming in. Finally, we see the average hourly earnings year over year staying strong at 4.1%. So Nick, what's the summary here? What can you say about jobs data? Jobs data was strong. And before we go any further in this video, I do want to just give you a last call warning. Today's the last day of the Edge Finder 30% off sale. Get yourself the same tools and data that I'm using to go through this on your own. There's so many powerful tools within the Edge Finder. We are constantly adding new features like the economic heat maps, smart money indicator tools, all sorts of economic indicators, and much, much more. If you're a regular fan of my channel, this is a great opportunity to get a significant discount on the software that I use in all of my videos to find the trades that I take. You can get 30% off with the promo code in the description down below, YTVIP. Or if you have questions, you can speak directly to our support team using the first link in the description down below. We do offer, and if you sat through this promotional ad, let me just give you a little secret. If you send a direct message to our support team, they'll give you an extra 5% off further. The Edge Finder is a one-time payment, and by sending us a direct message and asking a few questions, you can get a significant discount on the tool. So if jobs data was so good, then why is the stock market selling off? And this could be considered confusing for newcomers to the space, and fundamentals are not an easy thing to pick up, so I'm going to try and keep this as simple as possible. The dollar is stronger because, again, jobs data this morning was pretty good. So if we say, okay, jobs data was good, dollar index is higher, what's the big deal? Why is that bad for stocks? Well, stocks don't like this part of the equation. Yields are moving higher today. What are yields? Well, this is the yields offered on 10-year treasury bonds offered by the US government. And if yields are going higher, what that's saying is that the market thinks basically in order to buy bonds, we need a little bit more juice. We need a little bit more yields offered because we think, and I'm speaking of the bond market thinks that the Fed's not going to cut rates that much this year. And remember, rate cuts are stimulative to the stock market. So a lack of rate cuts is considered a negative thing for some of these areas of the market that are waiting patiently for lower borrowing costs in order to invest. One easy example is technology. So here's the NASDAQ, right? NASDAQ's a little bit lower here today. Higher borrowing costs weigh heavily on tech stocks because tech stocks are long duration assets. What I mean by that is they borrow now to build the technologies of the future. They need to borrow money. So if borrowing money is more costly to tech stocks, they can be hurt a little bit more than perhaps other companies that are less reliant on borrowing money. So the NASDAQ is a little bit lower here today, and I am still a bull on the NASDAQ, but I do think that we've been stuck in this range-bound market for a little bit, and I am interested in one of two scenarios that I've been saying over and over on my channel. Number one would be a breakout through these highs if we had seen, a jobs data point that was not so hot. That would have been good. Now, again, I want to go back to this concept. Jobs data good, jobs data bad. Which one does the stock market like? And the answer to that is somewhere in the middle. They want good jobs, not excellent jobs. And that's confusing because people think excellent jobs, shouldn't that mean that's great for companies? And it kind of is, but it takes away the rate cut story. This perfect sort of Goldilocks, not too hot, not too cold scenario for stocks would have been good jobs data, but not too hot, because too hot means rate cuts off the table. I know that's confusing for a lot of traders, and if you feel confused by that, you're not alone. A lot of people get all sort of mixed up with that. But stocks want good data. They don't want excellent data. They don't want bad data. They don't want poor data. They don't want terrible data. They just don't want exceptional data, which may take the punch bowl away in terms of Fed rate cuts. So the stock market is not really bearish from here in my perspective. It's just kind of neutral. I'm waiting for either a breakout and retest opportunity or a bigger pullback down to this area, in which case I'd be bullish. Quick look at the top setups indicator, and you can see we've got a couple things to talk about. I just talked about the NASDAQ, which is a top setup for me, but what about gold here? Gold really interesting today. We got to talk about that. And then also what we can see is that silver is getting a bullish reading. I want to talk silver. And then the 10-year treasury is also getting a bullish reading. I already have a long position on TLT, but very curious to see how that plays out. While we're on this page, you can see we're also getting some very bearish readings for a lot of yen pairs, which goes very nicely with this TLT idea, or 10-year treasuries. Basically, bonds are getting a bullish view on the edge finder, which typically would coincide with yen strength as well. We talked about that in a recent video about how those two things are generally correlated, JPY and TLT. So let's take a look at gold, which continues to hit a fresh all-time high briefly here, trading at 28.87. I can't believe that this is potentially going to happen, but my year-end target for gold was 3,000 going into this year. And last year, I set my target at 2280 for gold, and we ended up massively surpassing that. So could this be another year where gold just runs away? Well, I think right now gold is especially bullish for a simple reason. There's a lot of uncertainty. I know that many of you guys are aware with the tariff situation with Trump, Mexico, Canada, China, EU, all that stuff. There's just a lot of uncertainty. And now there's a deadline, right? The 30-day kind of countdown is on. And during that countdown, I would not be surprised if gold bullishness persists simply because people don't know what's going to happen with that. And when people don't know something in the markets, it's very often that gold gets aggressively bought up. Another big thing is China has actually been reportedly buying a lot of gold once more. So there's that kind of China buying gold. There's generally speaking, just a demand for the stuff, especially with a time where we're just not quite sure what's going to happen next geopolitically and trade war wise. That being said, with the Edge Finder giving me a bullish rating on gold, how do I actually play this? And for me personally, what this means is I'd be waiting for a pullback. So even if the Edge Finder gives me a bullish reading, it doesn't mean I whip my wallet out and start buying. It just means I'm looking now for opportunities in the bullish direction that also marry up nicely with the Edge Finder. So I'd be looking for a pullback. I like this 2780 area. Yes, that's high, but again, I'm a believer when it comes to momentum trading of buying high and selling higher, or selling low and buying back lower, right? So momentum trading 101 is you're actually kind of in a way chasing with risk management and, trying to be a little bit more selective. So I'm waiting for that pullback. If we get that reload, I'd be looking for a continuation play on gold, as long as the edge finder still gives me that bullish confirmation on the top setups page. Yesterday, we also saw something pretty interesting with the Bank of England. They sound pretty dovish and pretty willing to cut rates. In fact, they did cut rates, with a few of the panelists on the Bank of England actually voting to cut by 50 basis points. Now, they actually cut by 25, but the willingness for some participants to actually cut by 50 shows how dovish they actually are. The Bank of England seems very poised to cut rates. I remain bearish on this currency, as well as the euro dollar. Pretty much, I still do like the bull case for the dollar, especially after this NFP report. I currently have a long position on dollar CAD. I'm looking to build some more long positions on the dollar. And if I take any of those trades, they will be visible inside of our Discord server. Also, if you're not already in our free Telegram channel, there's a link in the description down below. We're going to be doing some giveaways and bonus video content in the Telegram. So make sure to join that if you have not already. The link to join is in the description below. For those who are looking to get funded this year, check out DNA Funded, today's video sponsor. They offer different challenges for different types of traders and offer a very wide list of different assets that you can trade on their platform. They also offer up to 90% profit share, and you can get a discount with our promo code on the screen right now. That's A1T10 for 10% off any of the challenges on their site. Use the link in the description down below. If the jobs data was still a little confusing to you, check out my raw reaction where I initially made the mistake of calling the data point mixed, and then later on went back and actually kind of corrected myself. Check out this data release that happened this morning and my overall coverage of it, in case you were a little bit confused about how the numbers fell this morning. All right, initial print is out. We got stocks higher here. NASDAQ a little bit higher. Let's take a look at that. Dollar index was also lower. That would suggest a little bit of weakness. There it is, 143K. So a little bit of weakness in the jobs print here this morning. Not a ton of weakness, but some weakness. Had we gotten into like a 100K, that would be considered largely weak. Unemployment rate also went down. So there's where you're getting some positives in this. Unemployment rate ticked lower. So there's some strength for the labor market. Slightly lower here. Wage growth increased by more than expected. Interesting response here today. Not an all green or all red reading. So we're getting a little bit of a mixed reaction here. Look at that. Russell lower. Now stocks moving lower. And that is what happens sometimes when you get these mixed reactions. I just want to warn everybody who's listening. I mean, obviously, it's probably too late if you were gambling the spike. But a lot of people, what they do is they try and do buy stops and sell stops on the news, and they think they're smart. And then it does this. You do not want to be that guy today, because that just crushed a lot of people. A lot of people got faked out trying to buy the spike. You got to be careful with that stuff. I'm not picking on anybody if that was you, but you live and you learn, and that is the painful reality of trying to trade news. Is it's very, sometimes when you get a mixed number like today, you get a mixed reaction. Look at this, guys. My goodness. They revised the previous number up to 307K. Wow. Okay, so actually, I take it back, guys. This is a hot jobs number. This is a hot jobs number. Okay, so the revisions were still coming in when I was looking at this. Whoa, that's strong. I take it back. It's not a mixed number. It's strong. Because look, okay, yeah, we missed a little bit here. We added significantly more jobs to the revisions. Revised from 256K, we just added 50K jobs to the last print. Even if we missed here a little bit, we added 50K jobs here. Average hourly earnings were high. Unemployment rate ticked lower. This is a hot print. That is a hot print. Okay, so I apologize for the initial, I guess I didn't see the revisions at first. They came out a little bit later. With revisions in mind, this is not a mixed print. I would say that this is a hot print. You have unemployment rate dropping, so more people who are looking to get employed got employed. They revised the previous number up, showing more jobs were added. When you take a net look at this, when you take a look at how many they added here, 143, okay, that's a little bit light, but they revised this one number up, adding 50K here. Let's be really, really basic here. Let's say we missed 25 here. So we missed 25 here and we gained 50. That's a net of 25. So we could just say plus 25K compared to expectations. That would be hot, right? Hot here, hot here. That's a hot. labor print. It's hot in here, okay? Chill out. Dollar index up to 108 here. Very interesting response here so far from the market. You had an initial pop higher. Stocks are slightly lower. There's not a huge reaction here. Bitcoin slightly lower. Dollar index is the winner so far. Yen crosses slightly higher here today. Mixed response from stocks because, again, they're kind of saying, look, a strong labor market, but also that might hurt the chances of rate cuts. What we can see on the yields front is, yes, yields are jumping here today off of a strong labor print. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.